Welcome back to another episode of Investing Explained. Here's today's question.
I guess I look at it a little bit differently than the zero-sum game kind of thing. I think if you're trying to strategically do something from like a quant standpoint, I guess I can see how people would maybe go in that direction. I look at it just like this. If I was going to go out and buy a business on Main Street, if I held that business for 5 years and I owned the entire thing and then I sold it to somebody else, I don't really necessarily see that as a zero-sum game. I see that as just me having a business interest, owning that business, selling it off to somebody else, and then me taking the capital and employing it any other way that I want if I want to own another business or whatever. The stock market's the exact same thing, only it's done on a micro level. And what's great is it allows people to take ownership in businesses that they could never afford if they weren't divided up into tiny little shares. Like you want to own Nike or you want to own Under Armour, you want to own whatever, you can own those businesses. You don't have to be a multi-billionaire to own those companies. If you want to buy that and hold it for 30 years, as if, Buffett would tell you to buy something and hold it forever with a punch card of 20 picks. If you're investing that way, which we highly recommend that people invest this way, that's going to be beneficial. I think when the market starts to be treated as if you're not owning businesses, you're just doing things to trade pieces of paper that don't mean anything to try to turn a profit, that's whenever I think you turn from using the market what it was really intended for to something that's different. Maybe what you're describing as a zero-sum game. I would encourage people to think about the market in that regard, that you're owning a fractional piece of a business that you really have a belief or passion behind that you think is doing good for the world. And I think that you're going to find that your yields return when you start investing in companies that you really believe in and that you think are adding to society's benefit.
I don't know if you refer to that being a zero-sum game, like the market will yield 7% for someone to gain 8%, another person would, have 6%. I don't know if that's how you look at it. And there's definitely some truth to that. And then you also have to pay commissions and other fees. But in terms of a zero-sum game, as it not making profit, you would still be better off as an investor, even if you underperformed the market by 1% instead of holding cash. Simply because the stock market yield, in the long run, that is all the listed companies, all the profits that's distributed back to the owners. I look at the public market as playing an important role for society. Think about saving up for retirement. Your parents might have invested in stock and done so, say, 30 years ago, and now they're looking to retire, so they would sell off their stock and then buy a fixed income, and it might be some of the same stock that you want to buy being a new investor going to the market because you have another risk profile. So I think the stock market is really good at distributing utility across society, and then you just have some of the other important factors like raising capital for companies to increase production, create employment, generate tax income for society. Definitely, whenever you watch CNBC or whatnot, there's definitely dark sides to the stock market. But in general, I think it's a very good thing for any country to have in terms of creating wealth. That's it. Preston and I will continue explaining investing, so go ahead and hit that subscribe button.